Welcome friends. So, now I am going to discuss very important area, that is we have seen valuation and we have done a lot of practical questions also. Now, one more then about practical questions. So, now I am going to discuss scanner questions that appeared in the last 2-3 years, 2016, between 2014 and 2016. All the questions are some of the main questions I am going to discuss, and these will be useful for your examination. Okay? These scanner questions, let us see. Look at this question. Sumit, a manufacturer, supplied the following information. You are able to see this? So, please go through this. Sumit, a manufacturer, supplied the following information. And this is a practical question. This appeared 2016 June, CS Professional. This question is June and CS Professional old syllabus. CS Professional. Okay? Question is very simple. Why I have chosen this? There is a reason, because there is a lot of technical area, the technical thing and of course concept involved. So, look at the question, how simple it is. It hardly takes time, but understanding requires. If you do not have the concept or conceptual clarity, there is a likelihood that you would make a mistake, and in fact some of the students have made that mistake also. What is it? It simply says cost of machines sold excluding duties and taxes. See, it is excluding duties and taxes. This is a plus method, right? So, when price is given excluding duties and taxes, we have to check up whether the price is the sole consideration or not. Suppose there are other considerations, we have to add up as per rule 6, but at the same time, if anything non-taxable element is there already included in the price, that we have to deduct. See, when the price is given, let me once again tell you, when the price under excise is given which is excluding taxes, so what we have to do is add, the formula is simply add taxable charges or dutiable charges and less non-taxables already included above. See, if it is not already included above, we do not have to touch. Included above in the price. This is a simple formula. But here in this particular question, there is one more important point also. That important point is about transportation. Transportation charges. This is with regard to not directly related, but somehow related to rule 5, right. So, we should understand the concept clearly, then you will be able to solve the problem very easily. So, you are going through, come on, go through, the price has been given and they are talking about transportation charges, octroi and interest for delayed payments. So, octroi they say already included. Next, interest on delayed payments and CST, rate of CST, of course irrelevant, because under excise, if we calculate excise assessable value and if we calculate excise duty, that is enough, because sales tax is added on and after adding excise duty. So, we have nothing to do with the CST because the price is not inclusive, but exclusive of taxes. Means when some question is given which is exclusive of taxes, remember all other things unless they specify are not already included above. Unless they specify, they are not already included above, because this value, the price is given as excluding taxes. So please remember this. This is a very important point. So this is a very tricky question, though it is very simple. And how to do it? Cost of machine, right? The cost of machine is 4,50,000. 4,50,000 is the price of the machine which is charged by the manufacturer, but at the same time what else are there? Transport charges collected. So they are collecting transport charges also. Actually 22,500, but 25,000 they charged. So there is a profit element. They are adding 2,500 extra, it's a profit element. And octroi not separately recovered. Not separately recovered means already octroi is included in the amount above. 4,50,000 is already including this octroi. So the thing is, this is a non-taxable element, because as per the definition given under section 4.3d, duties and taxes excluding duties and taxes, the transaction value is price excluding duties and taxes actually paid or payable. So this is a tax actually. Octroi is a municipal tax. The municipal corporation will collect for entry in the municipal area. So it's an element of tax already included. So to find out, to get the transaction value, this is to be excluded because this is already included. Okay? And interest for delayed payment beyond 30 days. Whatever it is, beyond 30 days, whatever be their terms, delayed payment, interest for delayed payment. Now the question is, this interest is being collected for delayed payment. This is collected in addition to the price, not that it is already included. No, there is nothing like that. But what about the interest for delayed payment? Is it a part of transaction value? No. Look at the circular, master circular issued by the board in 2000, and also subsequently you see the interest element is non-taxable even in customs. For delayed payment, any interest element is there, that is non-taxable because that is not in connection with sale. Logically, if you look at the definition of transaction value, this interest on delayed payment is not in connection with sale. It at the most it can be in relation to sale. So in connection with sale, that is to be added. If it is not in connection with sale, we have nothing to do with. So interest element is non-taxable, so we don't add it. Octroi is non-taxable, at the same time already included above, so we have to deduct it because non-taxable element is to be deducted. But any taxable element is there, it is to be added. But there is no taxable element right now here, because what about the transportation charges? This is a very, very tricky point. Please go through the video, my video lectures on Rule 5, where I have explained, even in the material I have clearly mentioned. So when profit is earned on transportation, in what circumstances that is to be considered, in what circumstances that is not to be considered. This is a case of plus method, means exclusive of taxes. So transportation charges collected 25,000, and but actual are 22,500, but these transportation charges are not part of value. Transportation charges are not part of value because these transportation charges are supposed to be assumed to be clearly part of, assumed to be that of carriage outward. So these are incurred from the place of removal to the place of customer, where title has already transferred at the place of removal. Suppose you are selling goods from factory to a customer and ownership transferred at the factory gate, it is ex factory price, but on buyer's request you are putting goods on a transport mode and maybe you have paid for and you are collecting. This is reimbursement. So, this cannot be part of value. So, important thing is point of sale. Point of sale, if you apply the principle of point of sale, say for example, this is the point of sale, say factory. Beyond that, whatever expenses that happen, that are incurred, they are not part of value. All expenses up to the point of sale, maybe factory, maybe warehouse, maybe sales depot, up to the point of sale, that is otherwise also technically known as place of removal, actual place of removal from there where the sale took place. So, up to the point of sale, whatever expenses are incurred, they become part of value, and beyond point of sale, they are not part of value. So, sale took place at the factory gate, okay. Sale took place at the factory gate and these transport happened after this. So, this is in no way in connection with the value, and in fact, the price is before taxes. So, this need not be considered because this is non-taxable. Had it been taxable, we would have added. This is non-taxable, we do not have to touch, just like interest for delayed payment. But octroi we have touched because octroi is already included there and we have to deduct that, we have to remove that because this is non-taxable. So, transport is non-taxable, not included, so we are not touching, and profit element irrelevant, we have nothing to do with the profit element, whatever be the profit element we do not have to consider, and interest on delayed payments is non-taxable and we do not have to consider, we do not have to touch it because the price is excluding taxes. Only taxable charges, dutiable charges we have to add up, and any non-dutiable charges already included above we have to deduct. Only one thing is there which merits a deduction, and the other two they do not have to be added because they are non-dutiable charges. And profit, whether he is making profit or making loss, it is irrelevant. It is relevant only when it is already included. I will explain that with another example also, where the profit element is to be considered. It is to be considered only when it falls under rule 5. Okay. Obviously, what could be the answer? You see, 4,50,000 rupees minus 2,000, 4,48,000, and all other things ignore. 4,48,000 is the assessable value, and if you have to calculate duty at 12.5%, 12.5% of 4,80,000 rupees. That's it. Right? Okay. See, let us see the next one. In the next slide, hints, assessable value is 4,50,000 minus 2,448, and the answer is 4,48,000 . We will go back. $448,000. This 480 is wrong. 448,000 into 12.5 divided by 100. Why it is 100? Because this is value. This is not inclusive of duty or tax. So, 448 into 12.5 divided by 100. It is as simple as that. Right? So, let us go for next question. Before that, let me explain. I want to take a white page, एक page extra. Okay, I can explain here also. question number 2. Okay, I will explain this. Suppose, what about the profit element? When you are making profit in transportation, when it becomes relevant, when should we consider that? Look at rule 5. I have already explained, please go through my video lectures. Rule 5. So, rule 5 of valuation rules talks about where place of removal and place of delivery are not same. Place of removal and place of delivery are not same, and the sale took place at the place of removal. So, in such a case, if the price includes freight and insurance charges, condition number 1 is place of removal and place of delivery are not same, and condition number 2 is price includes what we can say transport, freight and insurance charges. Freight and insurance charges up to customer, up to the place of customer. So, freight and insurance charges from place of removal to the place of customer means sale has already taken place at the place of removal, say factory or warehouse, and beyond that point you have incurred some transportation charges. In fact, the price includes that, even though sale already has taken place at the factory gate or at a warehouse, but this is already including. So, in such a case what happens? You see, okay, this is factory, and this is say customer. This is the point, say factory is in Delhi and customer is in Dehradun, let us say. So, then sale took place here at the factory, already sale has taken place here, but you are providing delivery. You are providing delivery to the customer at his request, and the price includes price, say for example 6,50,000 rupees, including rupees 50,000 as freight and insurance charges. So, in this case sale took place here at the factory gate, right? Sale took place at the factory gate and the expenses are incurred, the transportation, that is carriage outward, is up to the place of customer. So, any expenses, anything incurred beyond the point of sale, that is non-taxable. So, beyond, see, from factory to the place of customer is beyond 1. So, this transportation and insurance charge, transit insurance charges are non-taxable. Because these are non-taxable, already included above, we are deducting. So, in this particular case 50,000 is the actual amount incurred and we are deducting 50,000 rupees. So, we are getting 6 lakh, and 6 lakh is supposed to be inclusive of excise duty. Remember this, inclusive of excise duty, because value plus excise duty plus transportation. So, we have deducted transportation. Suppose there is a sales tax, you have to deduct sales tax also. If the question is silent about sales tax, we have to take it that sales tax is not there. So, 6 lakhs, suppose that tax rate is 12.5% excise duty. So, duty will be 6 lakhs into 12.5 divided by 112.5. It is not divided by 100, it is divided by 112.5. This point you have to understand very clearly, because in such cases that the price is supposed to be inclusive of duties and taxes. So, this is the answer. This is a plain one. Suppose it may happen one minute. Let me erase this. Suppose the question it is given like this, how look at this. The question it is given 6,50,000 rupees 6,50,000. Okay, and transport, actual transport inclusive, this is inclusive of transportation, actual transport incurred 40,000 but collected rupees 50,000, charged 50,000 from customer. Then how do you deal with this? So here you have to read rule 5 carefully. What does it say? It says if the price, place of removal and place of delivery are different, and if the price includes freight and insurance charges, of course insurance charges it is not mentioned directly. If the freight charges includes transport, then in such a case actual freight charges have to be deducted. Actual freight charges have to be deducted means actually it is 40,000. So only 40,000 you have to deduct. What about the profit here? There is a profit element. This profit element of 10,000 rupees that becomes taxable. So if you deduct only 40,000 instead of 50, you are collecting 50,000, but you have incurred only 40,000. So you made a profit of 10,000 that becomes a part of value. So here it is 6,10,000 rupees on which tax is to be collected. So on this excise duty will be 12.5 divided by 112.5. See the difference. What is the difference between these two questions? In the earlier question, we have not considered transportation charges at all. Profit, loss, we don't have to do. Here why we have considered? Because in this particular case, this is inclusive case. This is the minus method, where price includes duty and taxes, if any. So when it is inclusive and price includes particularly the transportation charges. When the price includes transportation charges are non-taxable, so you have to deduct them. How do you deduct? If you make any profit, that profit element becomes a part of value. Only actual freight charges incurred have to be deducted. Read rule 5 carefully. Only actual freight charges have to be deducted. So in this particular case it is happening. But in the earlier question it was not there, it is irrelevant because the price was given before taxes. Right? Got it? Good. You please take care of these things. It's a very, very important thing to understand. Now come to the next question. This is CA Final 2016, May 2016 question. Very simple question. See, question paper, you know how the question paper is set? One third of the paper will be set in such a way that everybody will be able to answer. One third. That's the reason why even if you don't go prepared, you will be getting around 30 to 40%. Why you are able to get 30 to 40%? Because one third of the paper is always easy and one third is always very difficult, and one third is medium level, above medium, and with reasonable preparation one can answer. Without reasonable preparation one cannot answer. That is about second one third. Last one third very tough. Only with expert level, only with thorough preparation and thorough understanding and with speed and accuracy, you will be able to answer the remaining one third. So, one third type questions, and in this one third type question, in this 1/3 type question, you see, this question particularly CA final May 2016 paper is not that easy, but 1/3 is always easy, and this falls under that 1/3. What is this question? You see, an SSC sold certain goods to AB Limited. Please go through the question carefully. So, an SSC sold goods to AB Limited for say 50,000 rupees, okay, and excluding excise duty and other taxes on 2nd October 2014. AB Limited is a related person. SSC sold to a related person, and he did not sell the goods, but used it for self consumption. And cost of production, cost of goods as per CAS 4 has been given as 60,000 rupees. Determine the assessable value. What will be the assessable value if the customer is not an SSC, is not a related person? If AB Limited is not a related person, we will come to that anyway. Similar question appeared in CA in 2009, and in 2011 I think similar question appeared in CS Professional. You see, it happens, and it's almost like a repetition. 2009 repetition. See, it's a related person transaction. We know if the in the case of a related person transaction, we have to take the price charged by related person to the other unrelated person as per rule 9 of the valuation rules, you know. Okay? Say an SSC is selling goods to related person, and a related person is selling goods to unrelated person. Suppose the price is X and the price is Y before taxes, let us say. The price between A and RP related person is not to be considered, because this transaction is considered a dummy transaction as per law. So, it is like principal agent transaction. There is no transaction at all. It is not recognized under law. Then what is recognized? The sale price, the sale between related person and unrelated person. This is considered. So, obviously, the price Y has to be taken. The price charged by related person to the unrelated person on the date of removal from factory of Mr. A, the SSC. Similar to rule 7, similar philosophy given in rule 7, that is to be followed. Only difference is here it is related person, there it is branch or sales depot, something like that. Okay. So, when the related person does not sell further, no further sale, means he is using for self consumption. Okay. So, when he is not selling, using for self consumption, then the self consumption of related person is treated as self consumption of the SSC himself, because in law, as per law, SSC and the related person are one and the same entity. In fact, this SSC is supposed to be selling goods to URP, that is unrelated person, through his agent, that is related person. So, I am selling through my agent to some other person. In fact, A is selling to URP, that is how the law takes. That is the reason why the price charged by related person to the unrelated person is relevant. If there is no sale and if there is a self consumption, the self consumption of the related person is treated as self consumption of the SSC himself. So, here SSC is cost of production plus 10% as per rule 8. You have to apply the rule 8 principle. Here in this particular case, as per cost accounting standard number 4, CAS 4, 60,000 is the cost of production. Obviously, 110%, add 10%, notional profit 6,000. Because you know why notional profit is added, why government says that you have to add some element, because excise duty is never on cost, it is on value. Value means cost plus profit. Here profit element is not known, arbitrarily government has fixed at 10%. You have to take 10% always. Even if the question gives 15%, 12% or 8%, ignore that. Exactly 10% you have to add because the law says it, rule 8 says it. So, 66,000 is the value on which excise duty is payable. Of course, on this excise duty is payable. And you must be knowing, maybe you are aware, there is a notification 67/95. Maybe you are aware of this. By virtue of this 67/95, if the final product is dutiable, intermediate product is exempt, there is no need to do all this valuation nonsense, simply nil assessment. But if the final product happens to be exempt, at intermediate level, proper assessment, proper valuation is to be made and assessment is to be made. So, nowadays cost of production based questions are very coming up, lot number of questions are being given in CA final examination nowadays. We will do them also. Okay, this is 66,000, and there is another part. You read that part. What will be your answer? What will be the assessable value if the SSC is not a aforesaid case AV Limited is not related person? If he is a not related person, actual sale price, transaction value we have to apply. So, transaction value means answer will be 50,000 rupees, because SSC sold certain goods to AV Limited excluding excise duty. So, assessable value is equal to 50,000 rupees. Why 50,000 rupees? Because he is not a related person. If he is not a related person, the price actually charged to the other person. It may look absurd, where cost accounting, as per cost accounting standards, cost of production is 60,000, whereas they sold for 50,000. What if? Price is price. You cannot, the department simply cannot say that there is undervaluation. It cannot say. Price is price. If he is able to prove that this is the price I have charged and there is no further consideration, there is no other consideration. What happened to Fiat India case? The Supreme Court said that cost of production plus some reasonable profit element has to be added. But after that, by virtue of the amendment, proviso has been added to Rule 6. By virtue of the proviso added to Rule 6, even if the price is not sole consideration, if no further consideration is flowing from buyer to seller, then such price shall be the transaction value. So, even though this is less, this shall be treated as transaction value. So, look at the answer. See 66,000, see 66,000, and then if AV Limited is not related person, answer is 50,000 only. Done? Okay. Move to the next question. This question is Divine Limited manufactures product K which is not notified under, which is a notified product under section 4A. Okay. This question is recent, is of recent origin. This is 2016 May CA final. Good question, thought provoking. Divine Limited manufactures product K which is a notified product under section 4A, means MRP based values. The output of the month given 8,000 units, of which 6,000 units were consumed captively. 6,000 captive consumption, 2,000, what happened to 2,000, let us see. Captively, abatement permissible under section 4A is 20%. 20% abatement means value is 80%. From the following information provided by Divine Limited, for the month of October 2015, calculate the excise duty payable. It's for 5 marks. So, very good question. Cost of direct material includes excise duty 18,800, 1,800, means if you deduct 1,800, you will get 17,000, because as per CAS 4, vatable taxes have to be deducted. Okay? We have to prepare cost sheet here as per Rule 8 of Central Excise Rules. and direct wages and salaries 17,000 I will write here. 17,000 material excluding excise duty, because we have to exclude excise duty, and direct wages and salaries, administrative cost, production related, okay, production related administrative cost 5,000, corporate office expenses 1,500, and sale of byproduct, that is 1,000, and research and development cost 8,000, abnormal and non-recurring cost 10,000, and retail sale price printed on the package of the product per unit. Okay, what else is he saying? Note, Senvat credit of the excise duty so paid is available. Okay, Senvat credit is available. So, you can use it. If the Senvat credit is available, you can use it. Divine Limited is not eligible for SSI exemption, means it has to pay duty on the whole. And there were no opening or closing inventory for the month. So, no opening or no closing means 6,000 units captively consumed. What happened to the remaining 2,000? They must have been sold under section 4A on the basis of MRP, right? That is the hint he is giving. Central excise duty payable is 12.5% ad valorem. Education cess need not be calculated. Done. 12.5% means automatically everything is included. So, what could be the answer? 17,000. This is taxable. Okay. $17,000 material cost, direct wages and salaries include, administrative costs relating to production include, and corporate expenses no, office expenses, corporate office expenses no, that has nothing to do with the costs of the product. Sale of byproduct, this is deductible, you have to deduct, credit with scrap, realizable scrap account. Research and development includable. Abnormal non-recurring costs not to be considered. Abnormal non-recurring costs, they are not part of cost. Retail sale price irrelevant. So, 17, 20, 28, 33, 41 minus 1. So, 40,000. This 40,000 is for 6,000 units, right? So, if it is 40,000 for 6,000 units, sorry, for how many units they have given? 6,000 units consumed captively. This is for 8,000 units, out of which the output for the month of was 8,000 units and 6,000 units are consumed captively. So, you have to find out, obviously you have to find out for 6,000 units now, okay. So, 40,000 is for 8,000 units. You look at this presentation, 18,800 minus 1,800 excise duty, so that is 17,000 plus 40,000. You got the 40,000? Yes, look at this. So, you got 40,000, that is about 8,000 units. And what about the rest? We have to find out cost for 6,000 units, that comes to be 30,000 rupees. You see, 30,000 rupees for 6,000 units. So, value is 33,000 and duty at 12.5%, it comes to be 4,125, and out of that Senvat credit is available already, you can take it. 2,325 is payable on this count, plus what about the 2,000 units? Let us look at the case of 2,000 units. So, 2,000 units, because there is no opening stock or closing stock, which means everything was sold, and the remaining 2,000 units, they are sold under MRP scheme. So, for MRP scheme abatement, you win out 20%, assessable value is 80% of the price, 10 rupees is the unit price. So, 2,000 units at 10 rupees means 20,000, 80 80% of 20,000 is the value, 16,000 is the assessable value under MRP scheme, and duty payable at 12.5% is equal to 2,000, and total excise duty payable. Already here 2,325 and here 2,000. So 2,325 plus 2,000 is 4,325. Done? So this is the answer. This is a very good question. This is the first question, compulsory question. You know, first question will be compulsory question. This is the first question in the paper. 2016 May. Okay, 2016 May paper question. And let us see next question. Working notes. See, working notes are equally important. Since the goods are captively consumed, value has been computed as per CAS 4. 4S, not 4S, CAS 4. Okay, as per, it should be 4 as per, as it should be as per CAS 4. Okay, done. As per CAS 4, and abnormal and non-recurring costs are not part of the cost. We know that when we prepare the cost sheet, we don't consider abnormal cost and non-recurring cost. And corporate office expenses, of course, they are not part of cost sheet, being not related to production. And then, since there is no closing or opening stock, the remaining 2,000 units are set to be sold under MRP scheme. So that's how we have done by taking assumption. Next question. This is also, in fact, this question is 2015 November CA final. I will put it 2000. Oh, already the given CA final November 2015. It's given now. Sri Ramesh Babu has manufactured goods for captive consumption. He has incurred the following expenses in producing them. This question, you see, look at this question. This question is also a beautiful question, and such questions never appeared before. For the first time, such a question appeared, and in fact, even the earlier question, that is also innovative, because in CA final question, in a CA final indirect taxes nowadays, some questions they are giving in a creative manner. This is also a creative type of question. So look at this question, read the question. Cost of materials and components inclusive of excise duty, they have not given, but we have to assume, because in this particular question the excise duty and service tax were taken at 12.36%, because at the time 2015 November, at the time the tax rates were service tax 12.36%, excise duty 12.36%. So in fact, we have to assume, then we will get proper calculations. For the purpose of convenience, I also take 12.36%, 12% and 3% cess. And if we take 12.5%, there will be some fractions. The answers will be in fractions, decimals. So I want to avoid. So cost of raw material inclusive of excise duty means, if it is inclusive of excise duty, we have to take it exclusive of excise duty. So if you take it, it comes to be 2 lakh rupees. If you calculate, you will get 2 lakh rupees. You can calculate 224 720 into 100 upon 112.36. You calculate, you will get the same thing. So 2 lakh rupees. Cost of material is 2 lakh rupees. In-house manpower cost includes administration salary not relating to production. Okay. They say in-house manpower cost includes administration salary of 18,000 not relating to production. So 18,000 not relating to production means only 30,000 relates to production. We'll take it. Design and engineering charges inclusive of service tax. Okay. If it is inclusive of service tax, because on service tax manufacturer gets Sinvat credit. So if you take service tax at 12.36%, you will get this for 20,000. Before service tax it is 20,000 rupees because we have excluded that. So good question, na? Service tax portion also we are excluding. Transportation cost of components to job worker. In fact, these have been sent to a job worker. So 2,800 we have to take. And job worker charges. Job workers invoice includes charges on job work and cost of consumables of 2,000 and not charged separately. Not charged separately means everything is included. Let us take all 20,000. And additional charges levied by job worker 2,800 and wooden boxes. So 4,000, 3 plus 4,000. Let us take the calculator. Okay, thank you. So, anything else? Let us calculate, let us count this first. 230, 250, 270, 276, 800, 2 lakh plus 50,000 plus 22,800 plus 4,000. 2,76,800. What else is there? Determine the assessable value payable by Sri Ramesh Babu. Hint to take service tax at 12.36%. Okay, we have taken. Manufacture of engine which has been used for captive consumption with the factory. Okay, they are going to another question. No? So this is the cost. This 276,800. 276,800 is the cost of production. So this is the cost, and out of which value we have, if you have to find out value, 110% of 276,800, because we have sent the goods to job worker, everything, even onward, return transportation, everything is to be added. So 110% of 276,800, so into 1.1. 304,480 less Senvat credit. This Senvat credit is 24,720 and also Senvat credit on service taxes 2,472. You deduct this and you will get the answer. So duty payable less Senvat credit. So good question. This is also a good question. 2015 November CA final. So this is intermediate examination of December 2015. Intermediate examination means CMA intermediate. But in fact this question you see, this question appeared I think in 2014, CA final 2014 question that has been actually reproduced and given in 2015 in CMA intermediate. The question is same almost in CA final. This is actually, if you look at the CA final scanner, you will get the same question. You will get the same question. Please read out, please read for yourself. 16,545 which includes 1,545 as duty, that is to be deducted. Cost of direct employees means direct wages, consumable stores, add, quality control, add, research and development, add, production overhead, add, administrative overheads. They did not say anything. What to do? Administrative overheads, let us assume that they relate to production. As per CAS4, only administrative charges relating to production are to be added. So, let us take it that way and add. And selling and distribution cost, we do not consider, because we do not have to find out selling cost of sales, we have to find out only cost of production. Scrap value realized, that is deducted. See, it is as simple as that. 16,545 minus 1,545 means 15,000. This is 15,000. Okay. And cost of employees 12,300, and consumables 8,400, we take it, and quality control 4,300, we take it, and research and development as per CAS 4, we will very much take it. Production overheads we will take. Administrative overheads, we consider that these are relating to production and we take it. Selling and distribution, we do not have to consider, because we do not have to find out cost of sales. Scrap realized, so this we deduct. So, 1500 gone, and the rest 15,000 plus 12,300 plus 8,400 plus 4,300 plus 2,700 plus 3,000, 45,700. You also please calculate 45,700, right? 15, 27, 35, 41, 44, 45, 700, right? 45,700. So, this is the cost, and add 10%, 45,700 into 1.1, that is value, and done. So, this is a very simple question now, but this question appeared in CA final and later on appeared in CMA Inter. Next, a manufacturer not eligible for SSI exemption cleared 100 pieces from his factory at Bangalore and sent to his Chennai depot on 1/1/2014. The net price of that product excluding duties and taxes on 1/1/2014 was as follows. Sale from factory 90 per piece, sale from Chennai depot 100 per piece. The excise duty rate was 12%. Ignore education cess and secondary higher education cess. The goods were sold from Chennai depot on 5/3/2015. On the day, the net prices were as follows. Sale from factory 95 per piece, sale from Chennai depot 105. The excise duty rate was 12.5%. Ignore education cess. Okay. Calculate the excise duty payable. Okay. Excise duty rate was 12.5%. Calculate excise duty payable. State the due date for payment of excise duty on this transaction. This question is actually again from CMA Intermediate. See, you may think CMA Intermediate questions we have to solve, not like that. Question is a question. This question, of course, if you look at CMA Intermediate questions, many questions they are repeated from CA final paper. Somewhere around 1 or 2 years ago, the question appeared in CA final and the question has been repeated in CMA Intermediate. That is the trend nowadays going on. Similar question was given, a similar question came in CA final also, similar but not same. And such a similar question, somewhat similar question was given in CMA final also. And what is this question about? You have to understand this. So, until and unless you understand the concept clearly, you will not be able to get it. You please spend some time on this, take at least 1 minute or a half minute, read and find out what it is. I will be back. Okay. gone through. This is actually a problem from Rule 7 of Central Excise Valuation Rules. Now you read Rule 7. See, this is from Rule 7. So, what is the philosophy in Rule 7? When you are sending goods to your branch, sales depot or consignee, etc., the price at the branch on the date of removal from factory or warehouse shall be taken. The price on the date of removal from factory prevailing at the point of sale, because you have to apply the point of sale principle. Let me explain this way. Suppose you have a factory at Delhi, and you have your branch, say at Bhopal. You are sending goods. Suppose, let us take the date October 3rd, 2016. On October 3rd, say you are removing goods today from factory, and how to proceed with, what is the value for the purpose of assessment? From this place to this place, goods are moving. Okay? So, we have to take the price on the date of removal from factory, but the price prevailing, the price actually charged on the date of removal. So, 3rd October price at Bhopal you have to take. 3rd October price, for example, 50,000 rupees per unit. So, this 50,000 rupees, this price you have to take here, and from here you have to make assessment and release goods, because without assessment you cannot remove goods. So, for removal there are two prerequisites under excise. One is you have to make assessment, and number two, you have to raise invoice, and in the invoice you have to put all the details. Okay? So, it is not ex factory price, it is the branch price on the date of removal from factory you have to take, and the quantity for the purpose of assessment, the quantity that you are sending shall be taken, not the quantity that is sold at the branch. Number 2. Number 3, price at the prevailing at the branch, but at the same time rate available on the date of removal from factory, not the rate of duty prevailing at the branch on the date of actual sale. It is irrelevant. So, it is 3rd October. What is the applicable rate of duty on 3rd October that is to be taken? Okay? So, in this case, you see, a manufacturer not eligible for SS exemption cleared 100 pieces from his factory at Bangalore and sent to his Chennai depot on 1st January 2014. So, the factory is here, Chennai, Bangalore. The factory is Bangalore and sent to his Chennai depot. The branch is, it is a depot, and the depot is Chennai, right? The net price of that product, excluding duties and taxes, on 1/1/2014. So, date of removal factory, date of removal here not October 3rd, let us say 1/1/2014, 1st January, that is it. So, it is 1st January date of removal from Bangalore factory, and sale from factory. So here it is 90 rupees. If it is sold at factory, it is 90 rupees. And sale from Chennai depot 100. The same thing at Chennai is being sold at 100 rupees. See the difference? At Chennai, because the difference is because of transportation and other expenses, you know. So when I sell here at my factory, I am selling at 90 rupees. When I sell at my branch or sales depot at Chennai, naturally, what about the transportation, etc., etc.? Naturally, the price is more, 100 rupees. So which price we have to take? Obviously, the Chennai price on the date of removal. On the date of removal, it has been given as 1st January. So the price on 1st January, that is 100 rupees. This is to be taken. Done. So 100 rupees per piece. How many units? 100 units. That too before excise duty, means 100 into 100, 10,000 per piece. The value, accessible value is 10,000 rupees. We got the answer. Excise duty rate was 12%. Ignore, says everything. Okay, whatever be the rate they give, because whatever be the rate they give, we have to calculate. If they don't give anything at all, normally it doesn't happen, then prevailing rate normally we take. For majority of the goods in excise, today the prevailing rate is 12.5%. Okay. So the goods were sold from Chennai depot on 5th March. On the day, the net prices: sale from factory 95, sale from Chennai depot 105. This is totally irrelevant. This information totally irrelevant. Why this is irrelevant? Actual sale price is irrelevant. The actual sale price on the date of removal from factory, that is relevant, that we have already taken. So 5/3/2015 prices are totally irrelevant. Actual sale prices at Chennai of the same goods irrelevant. The price of such goods on the date of removal from factory, that is on 1st January, is relevant. The excise duty rate was 12%. So excise duty rate increased. It is irrelevant. See, today I am dispatching my goods to my branch or sales depot. Obviously, today I have to finish my assessment. Obviously, I have to take the price of the branch or sales depot from where the goods are sold, because you know, apply the point of sale principle. If you apply the point of sale principle, the point of sale is Chennai. Point of sale is Chennai, not Bangalore. So because we are sending goods to Chennai, the Chennai price, because the goods are supposed to be sold from Chennai, the point of sale is Chennai. So Chennai's price we have to take. Okay. So Bangalore price in any way not at all relevant. So 100 rupees is relevant. The value is equal to 10,000 rupees. Accessible value. And what else? Rate is irrelevant. What is the rate applicable? Here 12%. Because I am dispatching today on 1st January, what is the rate applicable today I have to take? Can I can I look into future? At future, I have to predict at Amsterdam predictions, something like that. On 15th March, it is going to be sold and the rate would be changing. So I have to do at 12.5%. It is impossible. No postponement, nothing. Today, everything is to be finished today itself. So today's rate is 12%. So 12% on 10,000 is equal to 1200 rupees. That's it. It is as simple as that. Right? Calculate the duty payable. State the due date for payment of excise duty on this transaction, because this is from intermediate, na? Due date. What is the due date? A manufacturer cleared, sent to Chennai. He is not eligible for SSI exemption. So they are saying this is monthly. When you are not an SSI, monthly payment. So date of assessment is 1st January, right? When you made assessment on 1st January, obviously the due date is 6th February, next month, February 6th is the due date. Question answered, right? Good question. This is also a good question. This is also from intermediate, very simple question. This is for only clarity or conceptual clarity. You can say conceptual clarity. An SSC is selling. An SSC is selling 20% of his production through related persons and 80% is being sold to unrelated persons. How the goods are sold to related persons should be assessed. Actually, there are decisions, Supreme Court's decisions also. If you apply the Supreme Court decisions, the sale price, see, related 80% is sold to related persons. So, apply the rule practically, whatever you sell through related persons, the price charged by related person to unrelated person, that should be taken as per rule 9, and he is selling 20% of his production through related persons and through unrelated persons. The price charged to the unrelated persons can be taken here for the 20% as per the decisions given by Supreme Court. But if you apply the rules, if you apply rule 9 verbatim, for 80%, because it is sold to unrelated persons, apply transaction value, the price, actual price, you take actual price unless it is tainted, and for the 20% of production, you charge the price charged by related person to unrelated person. Simple answer. And look at this case study. Of course, part of it is in fact redundant, but still to discuss the case study, this becomes relevant. Look at this. Cost of a machine manufactured by, actually this is Fiat India Limited case study given in intermediate, CMA intermediate. Sometimes they will give case study also in intermediate. Say this, cost of a machine manufactured by a manufacturer was 10 lakh and it was high due to some factors beyond his control. And some of his competitors were selling the similar machine for, it was not printed, say I will put it as 8 lakhs. What is now 8 lakhs. Hence, the manufacturer decided to sell the machine at a loss to penetrate the market, penetrating price. Excise department contended that the excise duty should be payable on the basis of cost of production plus reasonable profit, even if the machine is sold at a lower price. Advise the manufacturer about the correct legal position. So, as per Fiat India's case, at that time, it was to be valued at cost plus 10%, right? Reasonable profit means 10%. But now there is an amendment, no? So, in the year 2015, there is an amendment, 15 or 14, I think 14, so 14-15. So, as per the amendment, if the price is, look at the proviso to rule 6, proviso to rule 6, find out from the material, search for the material and find out. Such a question may come in 2016-17 exam. A proviso to rule 6 says, if the price is not sole consideration, because Supreme Court said that this is not a sole consideration when you sell below cost, unfortunately. So, the rule says, the proviso says, when the price is not sole consideration and no further consideration is flowing from buyer to seller, buyer to the SSC, no further consideration is coming up, then take that price as a transaction value, means based on that you calculate the duty. So, as per the latest amendment given under rule 6, proviso to rule 6, the sale price shall be taken because there is no other consideration flowing from buyer to the SSC. So, correct legal position as per the latest amendment is rupees 8 lakh, the price at which the product is being sold shall be taken as a transaction value. And the decision given in Fiat India Limited case is nullified by virtue of this amendment to rule 6.1. Okay, done. Look at this question number 7. Anything else is there? Okay, basic duty, rate of special excise duty. What are the conditions? Sales tax, surcharge. Good questions. Okay, please read this question. Please read this question. 7A. Read it carefully. What does it talk about? From which rule or section, whatever it is, this question is to be solved. What is the logic? Compute accessible value. Okay, accessible value and excise duty. Accessible value and excise duty payable under Central Excise Act 1944 in respect of following transactions during March 2014. Such a question, a similar question was given in CMA final some 15 years ago. 16 years ago, a question came in CMA final. After that, in 2008-2009, yes, in 2009, a question came in CA final. Similar question. After that, a question, similar question was given in 2010, I think, 2010 CS professional, and again in 2015, I think this is in 2014 or 15, I think 15, the question given in CMA intermediate. Same question with some slight change, the same question is being asked. It appeared in CMA final, CS professional, CMA intermediate and CA final. Then what is this question about? But this question has been given with better clarity. Some clarity was given here. Compute the accessible value. So, following transaction during March 2015, opening stock nil, production 2000 units in March 2014, quantity sold 450 units at 200 on 5th March and 2014, let us ignore it is 2014 anyway, and 650 units at 190 and free samples cleared on 17th March 2014, that is 50 units. Okay, free samples 50 units, balance in stock 850 units, cost of production 100 rupees per unit. General rate of excise duty is applicable without any exemption. What is the due date of payment of excise duty? See, is not talking about excise duty rate, general rate of excise duty. We can apply any rate. Today, for example, today's prevailing rate is 12.5%. Okay, we can apply 12.5%. At the time, it was 14%, I think. At the time, 12% or 14%. Okay. Today, it is 12.5%. Then what is this question about? Opening stock nil, production 2000 units, and out of this 850 units are in stock, closing stock, rest were removed. How they are removed? 450 units at one price and 650 units at another price, different prices, and dates were given. Free samples cleared, date was given, and there are 3 sales, 2 sales and 1 distribution of as free samples. How do you take this? So, first of all, how do you answer this question? Under which rule or which method you do it? Free samples cleared. Obviously, this question cannot be. The whole question cannot be done with the help of transaction value. We have to apply valuation rules invariably. So, here opening stock nil 2000 units and 450 units, very simple arithmetic. 450 units sold at 200. We take a transaction value price, and that is say 5th March, let us write the dates also, and 650 units, 650 units at 190, this is also okay, and 15/3, 15th March, 5th March and 15th March, free samples 17th March, 17th March, that is 50 units. And what price? At what price? What should be the price? Cost of production has been given as 100 per unit, that is totally irrelevant. Earlier it was there, before, prior to 2005, the department CBC suggested that free samples shall be valued as per cost of production method, but later on they changed it. They themselves suggested that free samples shall be as per rule 4 of Central Excise Rules 2000. So here they have given proper information to apply rule 4. See why rule 4 is applicable here. If there is no sale at the time of removal, take the price of the previous removal. Because this is a question at intermediate level, the paper setter wanted to help the student understand, no confusion. Because rule 4 we can straight away apply here. You need not go for rule 11. Because on 15th March there was a sale, on 17th March there was a removal for free samples. So nearest previous removal, the price at the nearest previous removal is 15th March, but quantities are different, and because of that they did not say that because of that there would be some difference or discount like that. So the price of 190 I am taking, the price of the previous removal, so 190, that too. Otherwise also this is price of the normal transaction value, rule 2b, price of the greatest aggregate quantity. The highest quantity's price is 190 and the other quantity's price is 200. Highest quantity's price to be taken very reasonable, then you are applying rule 11. Whatever it is, 190 would be very logical and reasonable. So this one, they have the excise duty payable, assessable value. So they did not say anything whether it is inclusive or exclusive. I take it as exclusive of duty, this one and this one, and take 12%. 450 into 200 is equal to 9,000, and 650 into 190, 1,23,500, 50 units at 190, 9,500. So this is the total. How much it is coming to? 142,000. You please calculate yourself. 123, 140, 132, 142. Okay. So 142,000 and excise duty at the rate of 12.5%. 17,750. Done. Okay. So if you have to do the working notes, what are the working notes that you have to write? Because working notes are very, very important. If you don't write the working notes, you will be losing marks. So you will be getting around 60 to 75%. If the examiner is very liberal, he will give you 70 to 75%. Otherwise, he will give you 60%, even though your answer is all correct. One thing is presentation aspect, you should need neat and clean presentation, just like your cost when you put the costing information, cost statements in costing, like that you put in a proper format or proper way, presentable form, number one. Number two, you write the working notes. With the working notes, he will be convinced that it is your original work. Otherwise, he may treat this as something copied from somebody else. So, what would be the working notes? Let us look at the working notes also, because at least for one question, if you are able to write the working notes, that will be of use to you. First thing is free samples. It is a question of free samples. Free samples to be valued as per Rule 4 of Central Excise Rules 2000. Okay? No assessment has been made. No assessment is necessary for the closing stock of 850 units because there was no removal. Because until and unless you remove goods, you don't have to make assessment. So, assessment is not necessary for the closing stock of 850 units. Means you are explaining to the paper examiner that you know that excise duty is to be assessed only on the quantities that are removed. Anything not removed, no assessment is necessary. So, you know that point and you are explaining that. So, you should be clever enough when you write working notes, and all other things are irrelevant. So, as per Rule 4, you can continue, extend this as per Rule 4 of Central Excise Rules 2000, and as per Rule 4 for free samples, price of the nearest time of removal, price of the nearest time of removal or nearest previous removal, nearest time of removal shall be taken. So, we have taken this that way, right. So, there is a question, mandatory inspection charges, enter old syllabus. Mandatory inspection charges part of assessable value under central excise. So, this mandatory word is really dubious and misleading. That may be relevant for customs, not relevant for excise. Inspection charges part of assessable value, yes. Inspection charges are part of assessable value because they are incidental, they are a part of value, they are in connection with sale. Inspection is in connection with sale. So, after inspection, the product is said okay, product is readied okay and certified okay, then that is ready to be dispatched. So, it is in connection with sale, whether mandatory or unmandatory. So, that language is really not very much relevant, yes, it is part of assessable value. The price of machine removed, this is a good question, and this question actually is based on look at this question. This question is a case study. This is based on this was based on a case study. So, very long ago, I think 2005-2006. In 2005-2006, this question, the same question came in CS Professional. At that time, it was CS Final. It was called CS Final. So, it was a CS Final. The question was given in CS Final, and after that, in 2014, I think. In 2014, the question was, same question was given in CMA Intermediate. See question, the price of a machine removed from factory at Mumbai on 28th September to a buyer there for 4 lakh rupees, exclusive of excise duty and taxes, done before taxes. Suddenly the buyer refused to take delivery and the company increased the price to 4.2 lakhs with immediate effect. Okay, the machinery then sold to another buyer directly on 12th November 2013 at increased price of 420. What is the excise duty payable? rate of excise duty 12%. Okay. What was the rate of duty earlier? They did not mention. No? Excise duties, then the buyer refused to take. Okay. Rate of duty is 12%. The cum duty 12%. This is for 4 marks. What is your answer? Suppose you removed goods and sold to somebody, and that fellow refused to take delivery, and the same goods you sold to somebody else. The earlier sale transaction was cancelled. Okay, but the removed from factory, this is a very, very important point. They are talking about removal from factory. The price of the machine removed from factory at Mumbai. So, from factory the goods were removed, and at the time the price was 4 lakh rupees, and the customer refused to take, and after that in fact they increased the price of the machine and sold to somebody else on 12th November, and excise duty payable, excise rate of duty is 12%. So, let me tell you, in its lifetime a manufactured product suffers duty only once in its lifetime. A product in its lifetime, a manufactured product in its lifetime suffers duty only once. Only once. And duty is to be assessed as per the scheme of central excise. If you look at rule 5, so you have to make assessment at the time of removal, whatever be the rate applicable, that is final. So, whatever be the value, that is final. The first removal was on 28th September, right, 2013, and afterwards what happened? The goods were removed. At the time you have made assessment, afterwards there was a revision in price, or afterwards there is a revision in excise rate of duty, totally irrelevant. Once removed, always removed, that is done, over. Issue is closed. So, further subsequent change in price has nothing to do with. So, you have to make assessment on the basis of first removal. So, you have made it actually. When you removed goods from your factory, see, it is not sale which is the taxable event, which is relevant for assessment also. It is removal, not sale. So, you have removed on 28th September, whatever be the price available on the date of removal shall be taken. So, the assessment shall be taken, shall be made on the basis of 4 lakh rupees. And of course, before taxes they are saying rate of duty is 12%. So, if it is 12%, it is 48,000. Rate of duty is 48,000. Okay? So, rate of duty is 48,000. So, next question, the cum duty price per piece was 150 and the SSC paid duty at 20% ad valorem. This is a simple question. Simple question. This question was actually given by department as an example after Maruthi's case. So, there was a big case of Maruthi Udyog Limited decided by Supreme Court in 2001, in which the issue was the scrap sold by them without paying duty and without collecting duty from the customer, whether it should be valued, whether it should be taken as cum duty price or excluding duty. The Supreme Court said it should be taken as cum duty price, including duty. So, under reverse calculation, we have to calculate duty. That was the decision, and after that, this example was given, and it was given in CA final. Say this such question appeared in CA final long ago, 2010. In 2010, CA final, and after that, in other examinations, these questions are coming. The cum duty price per piece was 150, and SSC paid duty at 20% ad valorem. Subsequently, it was found that the rate of duty was 30% ad valorem, and the SSC had not collected anything over and above 150 per piece. Okay, determine the assessable value. How much you have collected, whether you have collected or not, it is none of the business of the department, government. So, the lawful, legally the applicable rate is 30%. It was a mistake. You paid at 20%. Whether you have collected or not, it is irrelevant, you have to pay. Even if you do not collect a single pie, you have to pay. But the amount, this is cum duty price. From this, they do not collect extra. Out of this 150 only they will collect. So, how do you calculate? It is 150 duty is equal to, duty actually payable is equal to 150 into 30 divided by 130. This way you have to pay duty, but you paid duty at 20%, that was a mistake. You have to pay the difference amount. Even if he does not collect, he has to pay. It is irrelevant whether he has collected or not. Then the other part is C, determine the transaction value and excise duty payable from the following information. What is it? Let us see. Total invoice price, it is a good question. This is also good question. Total invoice price. Okay, total invoice price. Total invoice price, it is 18,000, good. And invoice price includes the following. So, invoice price includes sales tax, it is to be deductible. Surcharge on sales tax, this is to be deducted, after deductible. Insurance from factory to depot, okay, factory to depot, this is includable because point of sale is a depot. So, this is a part of value, this should not be deducted. And rate of basic duty, okay, rate of special excise duty, what are the conditions for treating assessable value? So, very simple question. See, invoice price includes these are non-taxable, we have to deduct. What about the insurance from factory to depot? This is up to the place of removal, not beyond the place of removal. So, this expenditure 100 rupees is not to be deducted because this is a part of value, because point of sale is the depot. All expenses up to the point of sale shall be includable. So, 18,000, very simple question, 1,000, 100, 100. So, it is 1,200, 18,000, 1,200, 17, 16,800, and this is total invoice price including everything, and excise duty 10%, base rate of basic excise duty, rate of special excise duty. So, very old question, simply repeated, 24% ad valorem. So, 24 plus 10, 34%. So, duty is equal to 34%, na? 34 divided by 134 into 16,800. Whatever will be the answer. What are the conditions for treating transaction value as the assessable value of accessible goods? Leave it. The conditions for treating transaction value, you know that theory question. What are the conditions to be treating a transaction value as assessable value? When there is a sale and the price is acceptable, is before duty and acceptable, it should be before duty and acceptable under section 4(1)(a). If the conditions given under section 4(1)(a) are satisfied, then the sale price shall be taken as transaction value, provided that the sale price is before taxes, before excise duty. If it is after excise duty, you have to find out assessable value under reverse method, reverse calculation. There should be sale and the price shall be before duty and the price shall be acceptable under section 4(1)(a). What are the conditions given under section 4(1)(a)? There must be sale. Number 1, there must be sale for delivery at the time and place of removal, and the price shall be sole consideration, and sale must be made to unrelated person. If these three conditions are satisfied, then the price shall be taken as transaction value, provided that the price is before excise duty, excluding duty. Done. So CA final, these are simple, sometimes simple questions are coming now. CA final, I think 2015 November. In central excise law, briefly explain the following terms. Specific duty. What is specific duty? Specific duty means excise duty okay. Let us go back anyway. Specific duty means based on quantity. Explain. Quantity based assessment. Quantity based assessment means, for example, petrol, diesel, or cigarettes, or you can say molasses, like that. These are based on quantity. Marble slabs, square meter, petrol, diesel, liter, cigarettes, length or number of these cigarettes. 1000 units, 1000 cigarettes are taken as 1 unit. So that is called specific duty. Valuation is not necessary, but this can be applied only to narrowed, very few products where varieties are not large. If you have large number of varieties of products, variants in a particular product, this cannot be applied, because government has to fix rate for each variant, which is not possible. Suppose if you take the case of a petrol or diesel, not so many varieties are there. So for them, fixing the rate is easy, specific rate. It is convenient also, but at the same time not practicable for in many cases. And tariff value. So tariff value section 3(2). Nowadays at present, if you talk about tariff value, this is available to ready-made garments. At present, ready-made garments, this is applicable. So ready-made garments with MRP. If they don't have MRP, there is no use. If they don't have MRP, then transaction value section 4 is to be applied. If they are with MRP, then take 60%. Earlier it was 30%. Now it is 60% of MRP. Take with MRP, take 60% of MRP as value, and on this pay duty. And toilet products, skin care, toilet products, beauty items, beauty care items or skin care items. For them, recently they have introduced, it is 65% of MRP is value. Suppose it is 10,000 rupees, simply 6,500 is the value and add duty on that. So what about articles of jewelry? Earlier articles of jewelry were there. Now articles of jewelry withdrawn from section 3(2), normal transaction value, apply section 4 wherever applicable. And what about ad hoc exemption? It has become fashionable that the word ad hoc exemption is being used, particularly in CA examinations. Ad hoc exemption actually, if you look at central excise and customs, I am not taking service tax, because under service tax it was section 93, I am not considering. Central excise section 5A, customs section 25. Under these sections, government has been given full powers to grant exemption wherever relevant. Okay, wherever relevant. Then government uses the power. Government uses the power to do that. Government used also. And this exemption, whether it is excise or customs, it may be general, it may be ad hoc, or you can say general exemption by notification. So, for general exemption, it is notification is issued and published in the official gazette. For ad hoc exemption, this is also known as exemption by special order or specific exemption, or exemption granted to persons. So, this ad hoc exemption, this is by order, this is person specific, this is person specific, and this is goods specific. What does it mean? You see the difference. Goods specific exemption means general. For example, this pen, e-pen, this e-pen is exempt. So, this when this e-pen is exempt, whether you manufacture, I manufacture, or somebody else manufactures, or you import or I import, somebody else imports, it is irrelevant. Generally, this is generally exempt. That is the reason why this is notified in the official gazette. Automatically that exemption everybody gets based on this product. Whereas ad hoc exemption means special arrangement, specially that exemption is granted. How it is granted? Suppose Sachin Tendulkar got a Ferrari vehicle, as a gift from a foreigner company, something like that, and he applied for exemption, and government finally, initially did not, but finally government allowed, granted exemption. Done? So, finally granted exemption, that is called ad hoc exemption. Ferrari vehicle, so many other people imported, but they paid duty, but Sachin Tendulkar was granted exemption, that is as a special case. So, when exemption is granted to a person on merits, in special cases like charities, educational research institutions, universities, or persons of national importance, if they import or if they consume or something like that. In the case of a manufacturer, suppose you are supplying to Indian Navy. See, the consumer is Indian Navy, it's a special case, they grant exemption. Like that, ad hoc exemption is granted, right? Ad hoc exemption is exemption granted to persons. This is person specific, not goods specific. The goods are generally dutiable, but because you have manufactured, we are granting exemption to you. Similarly, because you have imported, we are granting exemption to you. So, that is person specific, that is called ad hoc exemption, exemption by special order. Okay? So, anything else is there? Next question, define the expression. This is CMA final. It is a very simple question. Define the expression transaction value as per section 4.3d. Should pre-delivery inspection charges and after sales service charges collected by dealers are to be included in SS value? Yes, these are to be included in assessable value, because these are to be pre-delivery inspection charges. What is happening? Pre-delivery inspection charges, after sales service charges are to be included. There is a circular in 2010. Of course, otherwise pre-delivery inspection charges, but you have to take it with a pinch of salt. What is the pinch of salt? Recently, I think it was in 2012-13, Bombay High Court has given a decision, very good decision. The decision in telco case, I think Tata Motors case said, if the pre-delivery inspection charges, before delivery goods are inspected, particularly vehicles, for that amount is charged. If these are charged by SSC, means SSC here means the transport company. If the pre-delivery inspection charges are collected by SSC from his immediate customer, that is dealer, then include. Suppose the dealer collects from customer, it is not to be included because it is the manufacturer who is collecting, so he has to pay duty. If the manufacturer is not collecting, that is not in connection with sale, so that is not to be included. So take it with a pinch of salt. The decision given in Tata Motors case, it was everything was given in my material, you please take care of that. It was given, the case was also given, explained clearly. And after sale services, there was a circular. Obviously, after sale services are like warranty charges, similar to, and these are also taxable, they are to be included. Okay? Transaction value defined under section 4.3d, you have to look into section 4.3. This transaction value means it is the price actually paid or payable for goods when sold, and including etc., etc., etc. Okay? So this completes the discussion of certain practical questions under valuation, particularly relevant for 2016 November and 2017 examinations. 17 at the most for 17 May. If GST comes, then everything will be irrelevant. Okay? Bye.